Assalamu alaikum and welcome back to the Ummahpreneur podcast. On this very special episode, I'm so excited to bring you this very special guest. And you know what I do? I bring you guests from all walks of life, from all backgrounds, to really shed a light on entrepreneurship, on business, and really help you understand what are the strategies that you can implement in your life as a business owner, as an entrepreneur, to level up and really get to where you want to be. And with me, I have a very special person to help you do that. It is brother Khalid Howladar, and I hope I pronounced that correctly, who is a partner and an angel investor at a firm called Accreditus, as well as a chairman of the board at MRHB DeFi, as well as a senior managing director at a company called Fleming Co. So I want to really just dive into all of that with you, brother Khalid, understand what you do in all of these different spaces. I know there's a lot of experience here that we can tap into, so I'm going to have to be selective, but hopefully we can extract as much information today as possible. So Jazakallah khair for joining me. I'm really excited.
Fantastic. Really love the opportunity and thank you.
Definitely. And one place that I do want to start is when I see someone like yourself, right? I won't lie. There's a little part of me that's like, you know what? After I go through this whole entrepreneurship thing where I'm in the grind, I'm actually out here building the business. One day, I think I like to step back and just kind of, be the investor, be the chairman, be the person, behind the scenes. For you specifically, in your journey and through your experience, what does it really take to become someone that takes on that role? I'm very curious. And I think this is a selfish question, but I think people will be curious as well.
Sure. So look, I would not have originally classified myself as a pro-risk venture type of person. If anything, I'm probably more risk averse, glass half empty. And if you look at my sort of quote career before 6 years ago, it's pretty, I would say, vanilla, child of immigrant, hardworking parents, education, undergrad and postgrad at Imperial, London Business School. So, tick the box, education, worked in Credit Suisse, worked at the defining part was 15 years at Moody's. So up until that point, I'm quite, I won't say boring, but I'm just quite a sort of middle of the road corporate guy working my way up the ladder. And then about 6 years ago, I reached a point in my career where either I just carry on this path and just head all the way up into seniority, or at that point I was relatively, in terms of my personal life, relatively free of liabilities, didn't have kids, etc. So I was able to take risk. And that's the first sort of lesson I'd say. It's much easier to take risk at a relatively younger age when you don't have responsibilities, and you can fail at a younger age without responsibilities than you can at a later age. And I think that risk tolerance is something that's quite important. And so I set up my own consulting advisory firm in my space, which is credit ratings, credit risk. And again, that's very institutional, old school financial markets, nothing particularly exciting. But I then started investing in startups, fintech, Islamic economy. I had a background, I was global head of Islamic finance at Moody's. I know a lot about that space. I've done stuff like psychedelic mental health, and now into crypto, as well as halal food. So it's a bit of an eclectic portfolio, to be honest. The main theme is I'm attracted to innovation and impact. Is there some angle that can have an impact on society, and it's not just about ROI or returns. But my institutional background, I think, has served me quite well because I have this kind of discipline. So a combination of kind of starting when I'm older meant I was sort of applying a discipline to my investments. And again, because, well, I was relatively free of responsibilities, I was able to invest in startups. And I suddenly realized I was a lot more entrepreneurial and pro-risk than I thought. Because some of the stuff I was investing in, was very early stage stuff. And I've learned a few lessons. I've got failures, I've got middle of the road, I've got successes. And over the last 6 years, my career to get to where I am today has evolved in a way where Going back to your original question, and apologies for going the long way around, I think my institutional background gives me a very solid foundation of discipline. And that set me up in a way that now that I'm working with ventures and startups, I'm the sort of seasoned guy, the conservative guy. It's the venture guys who are all optimists, dreamers. I'm the guy who comes in and says, no, that's not going to work. Or have you thought about that? At MRHB, they initially nicknamed me the chief negative officer, in a kind of friendly way, because I just keep blowing up people's ideas. So to wrap up or recap, that institutional foundation of education plus career got me to a certain point, and I was able to transpose that institutional knowledge and education into the venture space. And I think that's worked out quite well for me. And the last thing, look, I have a bit of a niche, Middle East, Islamic finance, fintech, crypto, but I'm not like a crypto bro or anything. I'm the old school guy who still believes in crypto, and that's the nice confluence of ideas.
There's so many questions that I have for you that I want to dive into, but I think one place that I do want to start is, you kind of, I would say, glanced over that phase in your life where you transitioned from corporate to investor. And I just want a little bit more details there for our listeners that are watching this, that are maybe curious themselves of wanting to invest in startups. Maybe they have a little bit of wealth sitting around and they don't want to invest in any stocks that they might deem to be haram. They want to invest in Muslim entrepreneurship or just entrepreneurship in general. What was the transition that you had to take? I know now we are, as you mentioned, you are a partner and founder really at the firm Accreditus. Do you need a firm to invest in startups? Do you need this official organization where you're positioning yourself as a venture capital, or can you just say, "Hey, I'm a solo investor going into this"?
Yeah, honestly, it wasn't my plan. I think I've got over 10 investments in startups, and now because my bandwidth has shrunk, I go more into funds, let's say. But how did it start? Well, firstly, it starts from a position that you have some liquidity or cash around. And then as part of a rational portfolio approach, equities, I'm not a fan, even from a non-Sharia perspective. Credit, bonds, yield, the returns are so sort of negligible. It just wasn't worth it. So I'm pretty much heavily invested in US tech, equities, and so on. But venture capital is probably the most sort of Sharia compliant halal thing you can do. It's so core to the ethos of Islamic finance that you invest, you don't lend, real economy businesses. So it just happened through my network that somebody was setting up a business or launched a project. And because it was, the very first one was halal ready to eat meals. So very non-tech, very non-cutting edge, but it was something that I felt was had a social good. There was some innovative technology involved in terms of this stuff was shelf stable for 2 years, and I thought, let me put some money into this. That was my first sort of venture. And then at a conference, I met a guy doing some really exciting stuff in fintech, and this was Blossom Finance, microfinance, and small tickets initially, but it usually came through a person. I wasn't systematically looking at portfolios. I met a person who was either inspirational or doing something powerful, and I thought, let me put a small amount into that. And so it wasn't, I would say, a particularly disciplined approach. I just kind of fell into it. But then the more I did and the more you got out there, the more people I met. And I was just putting small investments into these things. And then I started upping the ones that were working, upping my stakes. And then it just kind of grew from there. So I don't think you need to be this structured person that says, I'm going to do venture capital. And nowadays, there are a lot of platforms where you can sort of get together with other investors and sort of almost free ride on the back of other people who frankly know what they're doing. I actually wouldn't recommend my approach of doing it solo initially. There's a lot of skill set involved. find one of these groups, one of these crowdfunding, and get in with a bunch of people who know what they're doing, coast along, learn from them, and then you sort of carry each other. But
Yeah.
there's a lot of, I would say, Islamic VC groups, platforms, people getting into this space. And so I'd recommend find some friends, do it together, and leverage like-minded people for that investment goal.
Mm-hmm. I really appreciate those tips that you shared just now. And one question that I do have for you as well, you mentioned before this podcast, before we press record, we were talking about the potential of emerging markets versus developed markets. You were just telling me that you prefer to look at markets like the Middle East, whereas I was actually responding to you that wouldn't it make more sense for a business to actually target developed countries where they could afford to pay higher prices, which would lead to higher profit margins. Now, I'm looking at this probably from the perspective of a product or service-based business, so one where you're actually selling, something, whether tangible or not, for a fee. But of course, if we are looking at tech, if we're looking at other sectors, then that question and answer also might vary. For you specifically, what guides you to really focus on emerging markets? What is your methodology or what is your approach?
Sure. So let me clarify, because I have a kind of portfolio career where my day job is advisory, credit advisory, and it's that side of things that pulled me to the Middle East, because, for lack of a better word, developed markets are saturated with talent, smart people. It's hyper competitive, and in addition to be, let's say, less competitive in emerging markets, I think the opportunities for growth, competition, makes it more favorable. And that was, let's say, more my professional background. In terms of my investments, actually, it's a mixed bag between emerging and developed, because you can invest on the basis of a pitch deck or a story. But as I've discovered, whatever you thought you were investing in at that time, based on that pitch deck, by the time it either gets to failure or success, it's probably churned 3 times the business model, the people, lots of things are changing. So a startup is not like a corporate, a static animal that is doing a constant develop, even though they might pitch this plan and this roadmap and stuff. No. There's all sorts of stuff going on. And what I've worked out, actually, I go through people, trust. So as long as there's one person who's in my sort of first circle of trust at that firm, I then will go deeper. And in terms of my portfolio, I've got stuff in Canada, UK, Indonesia, Australia. And in terms of startup investing, it's actually a bit less risky to go for the mature markets, mostly because of rule of law. As a small investor, you'll kind of be protected getting into a startup venture in London or UK, etc., or Canada, etc. The Middle East, I feel a bit more cautious in terms of property rights, protection, and so on. And that's a bit of my glass half empty thinking coming through. So I'm much more comfortable at early stage investing in mature markets than emerging. So a bit of a split. My professional is EM, but my investing is wherever I find the right person. And then from the person, I think about the market.
Did you ever think of yourself that you would become, when you first began on this journey and transitioned towards investment, did you think that this would become really your life's work right now? As you mentioned, you are chairman of the board at MRHB DeFi. You have been running Accreditus now for over 5 years. Did you anticipate this? Did you intentionally pursue this path, or was it something that happened?
No. So look, here's another piece of advice, right? Spend the first half of your career broadening your funnel of experience, because you graduate, you might be a graduate in one discipline or another, but you're actually quite narrow. And either you're a person who stays on that narrow path and just accelerates from level to level to level, and you push on through. And if you're a high performer, by the time you're in your mid-40s, you'll be a managing director and doing quite well. Or if you're not quite sure, you just want this vertical path. I sort of, even within my career, I was a tech guy at the beginning, and then I worked in structured finance, and then I did Islamic finance, and then banks. I did all this different stuff, And I was thinking, am I losing momentum every time I change? Because
Mm.
somebody who's stuck on one path was going ahead further. And then, Khalid, you keep flipping around to different things. Are you losing momentum? And I always had this internal debate with myself. So spend the first half of your career, for me, broadening that sort of sphere of experience. So the first, let's say, 15, 20 years, and then use that to narrow in the other direction. So then with this broad batch of experience, that has then led me to discover the things I like. More
Hmm.
importantly, what am I actually good at? Which is very important. Play to your strengths. Don't try and do things that are not your natural fit. And I had never thought I was going to be an active angel investor the way that I am. It didn't even cross my mind 6 years ago. That's how recently. And then just through the network expansion, just through the opportunities I perceive in tech and crypto, because of my original tech background, um, I think there's huge potential in tech, both for society on an impact level and both from a profits and P&L type of level. So it suits me. And uh, it's almost like an accidental plan of sort of going where
Hmm.
I seem to be strong and I seem to have a network. So just by following the strengths that I built up in the first half, and then maybe I'm over the next few years, I might narrow on one or the other. But at the moment, I'm enjoying this portfolio career. It's a lot more mental overhead, but the variety of my work is great. I'm enjoying it a lot.
Yeah, definitely. And one question that I have for you, that I'm really curious about, because for people who would like to transition to this role eventually or are interested in this world of angel investing, one of the things that I know when you look at least at the venture capital firms of Silicon Valley and what we're used to is that these are firms that are generally placing bets on these startups and really hoping that they're going to grow and eventually go public where they can then, reap the benefits and they can, their shares can actually monetize. Now, when you approach this with startups yourself, I'm curious to know if this is the same strategy where you are really kind of betting on, and I'm not betting in the way of gambling, but you're really kind of setting them up for success where you want that business to get to the point where it either goes public or it gets bought out by a bigger company, and then you can recoup essentially the shares that you have within that company. Is that how it works for you, or is there different methods that you've seen with smaller firms to kind of be more sustainable?
Yeah. So look, again, as a non-professional, I can't say I'm doing it the right way. So, but for me, I just figured if you're invested in a firm that's creating value of some form, your returns will come at some stage. Now, whether that's because you get bought out in an acquisition, an IPO is probably quite aspirational, but one
Yeah.
of my investments actually listed in Canada on the TSXV. And so that's the sort of success story. But I don't have this ROI focused where I'm trying to say, oh, I've got to make at least 30% a year. As long as the trend is in the right direction, I think, okay, inshallah, at some point, this will be monetized. Now, it's very
Hmm.
important you don't invest money that you may need, right? So for me, it's the 80-20 approach to the portfolio. There's a cash element. The bulk of it is in liquid US and I have Shopify, unfortunately, in my portfolio, tech stocks, etc.
That's been rough
Um,
lately.
but these
Yeah.
are like relatively liquid, and
Yeah.
then the maximum is sort of 10 to 15% of my disposable cash in venture because I've got no idea when it's going to become liquid. And then the last thing I've sort of started adding crypto, etc. So make sure the money that you invest in this space is money that you don't need in terms of a time horizon, and and also I rightly or wrongly tend to go deep rather than wide. So that means I can't afford to take this shotgun approach where I make 20 investments and hope that one of them pays off and covers off the others. And because I go deep, I tend to try to work with the founders, advisory board positions, CEO advisor, because I'm almost protecting my interest in that way. And so it's a narrow approach, but because I have a much deeper understanding of that business, potentially it's less risky. So far, it's working out for me, but I couldn't tell you with a high degree of confidence if that's a replicable strategy for everyone. It's just the way that it's happened for me as the accidental angel investor in a way.
Okay, I understand. Now, one direction that I do want to take this conversation is your role with RJ Fleming Co, right? As a senior managing director, you mentioned you are the head of credit in Sukuk. Now, when I read this word Sukuk, I'm thinking of like the Arabic word souk, which is market. I don't know if that's related to it at all. What is the head of credit in Sukuk?
No,
exactly?
no, no.
What do you do?
Sukuk
I could be way off.
yeah, no. So, and look, it's how do I explain it? Like there's like if you think about the bond market, Sukuk is the Arabic equivalent of a bond, of a corporate bond.
Got it.
And the market's worth probably about 600, 700 billion. And it's something I have mixed feelings about because at Moody's, when I worked there, our job was basically to analyze and give an opinion on risk. And you didn't have to give an opinion necessarily on whether you thought it was Sharia compliant or not. And I actually have a bit of an existential issue with the whole Islamic finance industry. And this is reasonably controversial, and people either sort of love me or hate me for this. A lot of the 3 trillion industry is replicating exactly the same products as interest-bearing debt, loans, credit cards, etc., changing terminology. So for me, it's a form over substance, compliance with the underlying principles. And in that way, it's a bit disingenuous, and it actually detracts from the core principles around investing and non-interest based type of activity. And so Sukuk is when, let's say, a corporate wants to issue this version of a bond, which is essentially a fixed income instrument. Now, because I have professional and corporate expertise in that area, I focus more, let's say, on the rating side, on the corporate side of things. But because for me, that's, call it Islamic finance version 2, I'm much more keen on working on Islamic finance version 3, which is sort of the more fintech side, and version 4, which is the crypto and DeFi side, because the idea of investing and partnerships and business is something that before we were limited by technology. We couldn't crowdfund ventures. We couldn't finance other people. We couldn't share dividends with 100 people. We couldn't fractionalize ownership. With fintech and crypto and DeFi, I think we actually have an opportunity, once in a 500-year type opportunity, to actually move halal investing, Islamic investing, away from just copying the existing markets and just focus more on the peer-to-peer investing, on the crowdfunding, on the venture investing, on the asset-backed financing. Technology, I think, can help us get to a more sincere version of Islamic finance. There's a lot of incumbents in the industry that will take exception at that statement, but I'm happy to go one-to-one, with anyone that wants to challenge on that. But so technology is a real enabler, I think, for Islamic finance version 3. And the last thing I just want to say, I have a mortgage, on my house, etc. When I first came across the concept of Islamic finance, what do you mean interest is prohibited? What's the big deal? I was relatively ignorant of Islam as an economic model. And then guess what? Muslims didn't invent it. Orthodox Christians, Orthodox Jews, Greeks, they all had this prohibition on interest. And pre-2008 global crisis, you probably would have had a hard time trying to get people to buy into an alternative mode of economy and finance. You look at where we are today, money printing, inequality, fractional banking. It's just, monetary policy has gone crazy, that the solution to debt is actually more debt. I mean, if you did this as a person, everyone would say you were crazy. Oh, you're in a lot of debt. Oh, let me borrow some money to get myself out. No, no, no. So it's interesting that the relevance of non-interest based finance, that the Turkish call participation finance, I like that term much more. It's much more inclusive. I think has immense relevance for where we are today and the challenges and problems we are seeing around us. Cost of living, inflation, all this stuff that's happening. It's a consequence of central banks, monetary policy, all this stuff. And this anachronistic religious orthodoxy of the Abrahamic religions. Oh no, lending for interest. It's a whole another podcast to talk about monetary policy and interest-based lending. But I think the relevance is really current, and technology is an enabler for that.
How do you foresee right now? Where do you foresee the future of Islamic finance going? Because Islamic finance, when we talk about this right now, even when I first started this podcast, I think a little over 2 years ago now, alhamdulillah. And one of the things was there were a few players, at least within the Western, North America, Europe markets. And I'm honestly seeing, even just over the last year, at least 5 new players enter the market of Islamic finance, some of them through cryptocurrency, some of them just through the traditional like murabaha and other methods. And so I'm curious, in regards to just this market in general, where do you see this market heading to? And what is this telling us when we see all of these companies trying to provide solutions to Muslims who obviously want solutions that are halal, that are Sharia compliant? Because this is being more and more addressed, I would say, by most businesses that are looking to tap into this market.
Yeah, so look, as I mentioned before, I think there are inherent problems about the current form of Islamic finance because, in my perspective, I'm not a scholar, but I'm a technician, and I've read tens of thousands of pages of legal documents that present their image of one thing and in reality get you exactly back to the same place as an interest-bearing instrument. And people seem comfortable that a superficial formulaic compliance is okay. So I see it growing just by virtue of the demographics in Muslim majority countries. I don't hold that growth as a success for the ummah when you're just dressing up a product that you can still get indebted, they can still repossess your house, you can still get over levered. So if the substance of an Islamic bank does exactly the same as a conventional bank, what's the value to society or the ummah? And it's interesting, in Western countries where I think the education level is higher, I've been in the back of an Uber, going to give a lecture at Cambridge in Islamic finance, and the taxi driver, who was visibly, I thought, a Muslim, asked what I was doing, and I thought he was going to say, "Oh, mashallah, Islamic finance," and the guy basically says, "BS." I practically like this is and he said, "Oh, it's just banking, but they charge you higher fees and commissions because it's halal." So going back to your question, I still think it's going to grow. I think people are happy as long as somebody somewhere certifies that it's Sharia compliant. My responsibility is absolved. But I really hope and I expect technology to allow the investing side of things to grow. And my hope is that that side goes from being a marginal 10% of the market to 20 and 30. And it's much more, in my view, Sharia compliant. So I hope for the growth to be in that area with technology.
I'm curious, and this is really diving a little bit deeper into the weeds here, but what for you would be an example of a more Sharia compliant strategy? Because I know, for example, one of the ways that we essentially position a loan as Sharia compliant is, let's say a company will purchase a home, right? They want to give you a halal mortgage. So what they're going to do is they're going to say, okay, this home costs $500,000. What we're going to do is we're going to purchase it and we're going to sell it back to you, let's say at $700,000, right? Which is, as you mentioned, kind of like similar to what you would eventually pay if you were paying interest on the property. It would be, we would divvy up the payments, and then as you pay, the property slowly becomes in your ownership. If there's any issues there, we still own the property, kind of thing. Now, that's generally what I've seen in the market so far. is there a different approach that you would suggest that you think is more equitable, is more just?
Yeah, look, the problem is the sort of what I would propose to be the more Sharia compliant approach doesn't align with human nature of greed, right? So nobody buys a house thinking that the price is going to go down. So you buy a house and maybe it's 90-10 at the beginning. And as you say, in a sort of reducing musharaka or reducing kind of ownership type of perspective, over time you own more. But that means if you, let's say you manage to get to 50-50, if you sell it, that means you give 50% of the profit to the bank and 50% to yourself. And you know what, as a human being, no, I want to keep all the profit. Now, in my perspective, in a strictly halal mortgage, well, no. You were sort of joint venture partners in the ownership. If you sell it at a profit, you share it with the guy. But similarly, in a bear market, if it crashes, the bank should share the loss with you. So that's a more halal, I would say, approach. When you're putting together a back-to-back instrument that says, actually, what I'm doing is giving you leverage to buy a house. If it does well, you take all of the profit, and if it does badly, you take all of the loss. You're back. You know, it's not really strictly the halal approach, but as a human being, you don't want to give up the upside, and you know, in a perfect world, you'd share the downside, but you'd keep the upside. So it's one of those things where you can't have your cake and eat it. If you had a system where it was like that, you wouldn't have these housing crises, because the bank would never lend you a property that they thought was overinflated. That's the subprime crisis. If these were all genuine musharaka type financing, no one would have lent you, because they were going to share the downside with you. And it would be a natural break on house prices. It would keep things more stable. People would be more sensitive to the risk, instead of using your house as a leverageable asset for wealth creation. So the home has gone from being a place that you live in to a place that you seek capital gains and investments. So you're commingling. So that's what, on a more macro scale, under Islamic finance, you might have lower growth and lower personal returns, but you might have a more stable system. You know, that's a whole PhD thesis right there. But I think the risk sharing aspect, just to close, brings better governance into the financing. If I'm sharing the risk with you, I'm going to think really hard about financing your property. If I'm not sharing the risk with you, you know what? I'll lend you 10 times your salary, because if you default, I'm coming after you and tough on you. So that risk sharing creates governance in society and governance in the economy.
It's a very interesting perspective that you share here. And let me ask you this to kind of follow up, but not necessarily within the same sphere, because I want to touch upon a lot of different topics. Yourself as an investor, when you are looking at these emerging markets that you mentioned earlier and these companies that you potentially investing, what is it that you are specifically looking for? Is there something that you've realized, ultimately, this is a common trait that I've noticed across my investments? Generally, I tend to move forward when I see X, Y, and Z. What is it that you're looking for?
So I'll tell you what I'm looking for now, because I've learned some lessons along the way. I will no longer invest in single founder companies. You've got to have a co-founder, or ideally I've got my sort of rule of three, that because your whole investment can go down if the guy or the lady, you know, packs up or wants to move on. A founder needs an internal challenge to their viewpoint and perspectives, because as an investor, and even as a board member, you're not there every day to knock around ideas and challenge them, and to make sure the robustness of decision making is much stronger with multiple founders. And when you have two, even, it can be hard to break a deadlock. So that's why I've kind of got my sort of, you know, ideally a team of 3 people, where if one person leaves, the other 2 can carry on, and so on and so forth. So that's one lessons I've learned. So no longer single founder enterprises. The other big thing for me is corporate governance documentation. I know it's really dull and it's really boring. If the startup has really high quality investment documentation, and that's an absolute nightmare because legal documentation can be expensive. It can be challenging, but nowadays there's lots of template structures, safe notes, stuff that you can almost copy paste and just chuck your name in, and hopefully it's for me, if it's US or UK template documentation, I don't have to overthink it. Whereas if I'm investing in a startup in an emerging market, I don't have the domain expertise to evaluate the enforceability of that documentation. So founders, documentation, jurisdiction are, so you can see I haven't even mentioned what the startup is actually doing. It's got to be something reasonably exciting and innovative, but I've got these sort of gates now that the startup needs to come through. And if you've got these sorts of gates covered, well, then I'll think, okay, let me see where they are now.
Do you look for startups that already have their proof of concept, meaning they validated their product market fit, or are you okay investing in a startup that is a business plan but has not actualized?
Well, I mean, then it would depend on the people, because honestly, a business plan typically isn't worth the paper it's printed on. Like, it will not survive the first 12 months. You learn things along the way, etc. So if the founders are repeat winners, then that's a no-brainer if they've done it before. Or if you personally know the founders and know their commitment, if you know their ethics, if you know their mentality, but then it becomes more, you're actually investing in the person, and you're hoping that based on their track record as an individual or as a founder, they can reproduce. And I've got no problems losing money to somebody I know and trust who failed for legitimate market reasons. But losing money because of ethics, because of corruption, personality, all these sorts of things, I can't sort of handle that. So track record in terms of venture delivery or ethics or personality is kind of how I would invest in somebody with a business plan. It's not the plan I'm investing in, it's really the person, because you can't really validate their plan necessarily, and you're not going to be there to monitor the plan. So you're going to really rely on that individual to follow through. Better to do your due diligence on the person, because I think it's false precision to be analyzing people's plans to the nth degree when things in 12 months time may be completely different.
What are the common traits you've seen within founders that are generally successful? And I'm saying generally because success can be defined in many different ways. But from your perspective, what are the common traits where you've seen, okay, I see this in you. This is something that I've seen in most successful people. This stands honestly out to me.
I don't think I have a large enough sample set as yet. I've not been in it long enough. I haven't seen enough exits or enough successes. Like, most of my portfolio is still in the sort of angel or Series A type stage, and so on and so forth. Domain expertise, someone that has a compelling advantage. Like, I was actually speaking to somebody the other day who's got a legal background. Young person, the son of a family friend. The father said, "Oh, look, you do this stuff in crypto and NFTs. Can you speak to this guy? I don't understand." And then he told me his sort of plan, and I said, "Why the hell would I buy an NFT from you? What do you offer? Where's you're a lawyer. Fine, it's a great idea. What have you done in this space?" And I just look, because he's a family friend, I just shot him down. I don't think there's any there's no value in flattery or indulging. You just got to be harsh, especially with younger people, which is why people call me the chief negative officer.
I think it's
Um,
necessary.
yeah, and I'm like, no, I mean, honestly, nothing you've said leads me to believe I would buy this NFT from you. And the stuff that you've said that
Mm,
you'll do to attract people, and he spoke about this community that they would build, and how. And I said, okay, what experience do you have community building? None. Okay, so you haven't done NFTs, you haven't done community building. I said, look, if you want to do something in crypto, you're a lawyer. Blockchain and law, crypto law. Oh my God, it's if you're a lawyer out there, if you're a lawyer, make
yep.
sure you put crypto into your domain expertise, because it will be huge.
Hmm.
And find a product that leverages the stuff you've studied, the stuff that you're involved in.
Play on
You
your
know,
strengths.
yeah,
Mm,
play in your strengths. That's not to say you can't switch, but I mean, don't come to me, right? If
100%.
you're good at something, a natural leverage in your area. So that's one. And just ethics, hard work. I mean, if you know somebody had to, really work hard to get where they were, you know, immigrant background, challenged backgrounds, uh, you know, those sorts of backgrounds had it way harder. And if they've managed to get themselves, and I hate to focus on academia, but if you've managed to get yourself into a good school or a good firm, typically, and you're from a more, let's say, underprivileged, low income, minority sort of background, you might have had to work harder. And that's your non-corporate track record that shows, you know what, I did what I had to do to get where I can. So I can do that again, and I can do that again.
Hmm.
So that's, and maybe that's my bias as the son of immigrant parents who did the hard thing and then gave me everything, and then I did the hard thing. So maybe I have a bias towards that background because I understand it better. But that's just personal.
I appreciate you sharing that, brother Khalid. And I have a question for you that I ask most guests that come on this podcast. One of my favorite questions to ask. And it has nothing to do with Islamic finance or with startups or with investing. But I do want you to reflect on maybe the journey that you've been through to get up to this point. If you could revisit yourself, the younger you, maybe the 18, 20-year-old you, as at the cusp of adulthood, ready to enter and embark on this journey of life officially, right? And you could tell him one thing that he could hold on to throughout his journey that will maybe make it a little easier, maybe some lesson, some piece of advice, some words of wisdom that he could hold on to. What would that be for you? What would you tell him?
Um, so, and this is going to be a bit cynical, unfortunately. Don't project your own sense of integrity, honesty, and ethics on everybody you meet. So, where I have come undone is that you meet somebody with a, you know, strong background, strong this, strong that, and because you are an ethical, sort of moral type person, you figure everybody is like you. And then guess what? Unfortunately, in this world, I don't know whether it's 50-50, 80-20, but that naivety can get you into trouble. So um, it's a bit sad to be a more of a cynical person than, I think I was probably more idealistic when I was younger. And I've learned through some, let's say, poor decisions that, you need to be a bit more cynical, a bit more disciplined, a bit less idealistic about the environment around you. And I think caution would sort of serve you better. Um,
Mm-hmm.
that's the main thing I would.
Is it that you feel like throughout life you've been in situations or maybe certain instances where you were taken advantage of, or simply the other person didn't reciprocate, as you mentioned, in terms of their honesty or integrity, and that caused a deal to fall through, or caused a situation where you felt like you got the
Yeah, no,
short
no,
end of the
it's, it's,
stick?
it's, it's more general than that. Look, people are wired differently. Now, everybody probably has their own internal wiring depending on how you were raised, your peer group, For me, like most people, my parents were a huge influence, along with fictional character Captain Jean-Luc Picard, of the Enterprise and so on. And things that you think are obvious about conduct and behavior and business and so on, people don't see things the same way. Some people are relationship driven, some people are transaction driven, some people are ethically driven, some people are altruistic. And so everybody has a different complex set of agendas and motives. And you tend to project what you are onto other people, as opposed to maybe spending more time and assessing. And that can lead you to make decisions that are maybe inappropriate or overly risky or overly conservative. It can go in both directions. But just be mindful of projecting your own experiences and values on people that you're engaging with. And actually, if I can give a second tip, if you're in a situation where you feel you're using your personality too much, phone a friend. Get someone who has nothing to do with your business, your venture, your transaction, and get them to come in and say, this is what I'm up to. What do you think? Cold to the story. And obviously they need some domain expertise, but definitely always get a second opinion. And ideally from a person who doesn't, who's not a sycophant, is not shy, likes to give you a hard time. Your best friends are the ones that come at you head on, face to face, and tell you stuff you don't want to hear, rather than trying not to rock the boat.
I really appreciate you sharing that, Khalid. This was an absolute pleasure. I honestly enjoyed every minute of it. I wish we could dive deeper. I think we could probably stay here for another 2 hours, and I would love to unpack all of your brain. I might have to request for you to come back on this podcast. I think I probably will. But with the time that we've had, I just wanted to share my deepest gratitude for yourself, joining me on this podcast, sharing with me all of this value and this information. And I'm sure that my listeners have enjoyed it just as much as I did. One thing that I do want to ask you before we wrap this up, inshallah, where can people go to connect with you? Where do you want people to go? Is there a certain call to action that you want to give?
Where I want them to go in terms of their lives, their business.
I would say, usually because that's a good question. I would love for you to do that, but that would probably take a bit too long. Where would you want them to go in terms of connecting with you, or is there a business you're working on where you can get support? Or
LinkedIn is the main forum where I'm active. I tend to post a lot of stuff there, not just about the stuff that I do in terms of venture, but in terms of social concerns, whether it's like world peace or monetary policy and all sorts of other stuff. Don't be too optimistic about getting I have at the moment cognitive overload
100%.
Between day job and stuff. But look, connect. I'm quite at this time focused on crypto and DeFi. So if you're doing something in that space, you'll probably get more of my attention. Crypto, DeFi, fintech. I think it's a game changer, but that's maybe that's a separate podcast. We can 100%. Go into halal crypto and stuff like that.
Yeah, I would love to actually. I would love to hopefully have another session with you in the near future, inshallah. But Jazakallah khair so much for joining me today, for sharing with us so selflessly your wisdom, your knowledge. I really appreciate the time you've given us. Jazakallah khair.
Thank you very much, and assalamu alaikum.
Alaikum assalam wa rahmatullahi wa barakatuh. And guys, remember, in this podcast, if you've enjoyed it, go ahead and review and rate the podcast and subscribe if you haven't already. Every week we release an episode on Tuesday. Go and follow us on Instagram or YouTube or any channel that you're on. And until next week, take care, guys. Assalamu alaikum wa rahmatullahi wa barakatuh.